Hi everyone, I guess I'm live. I didn't put my comments on there or my topic on there. But anyways, thank you all for joining me. Today we're going to be talking, I'm sorry it's late in the day. I had one of those very busy days, but I'm happy you joined me. So today we're going to be talking about what if you or your spouse, your current spouse or your former spouse, falsified a tax return and now you're the one who's liable for the tax. So there are four things we need to consider first, right? When you file a married filing joint return, right? You file a married filing joint return, it means you're jointly and individually liable for that tax. What does that mean? It means they could go after you. The IRS could go after you as an individual for the whole amount due. So remember, if you file a joint return, you were married at the time, you filed a joint return, you are equally liable for the full amount, okay? So that's the first condition we need to consider when you're thinking of what you could do, if you have a tax that's due based on something your spouse said. Did you file a joint return? Yes, you did. The second thing is falsified returns. What exactly qualifies as falsified returns? It was, first thing is unreported income, okay? Let's say your spouse had gambling winnings. He went to a casino, won like 20,000. He didn't tell you about it, did not report it in their tax return. Okay, another example is investment income. He had some stock, he sold it, you didn't know about it, he didn't tell you about it, he didn't report the income that he made from selling those taxes from those stock to you. You didn't know about it. How, you didn't have any clue that he had all that money. So that's another condition. Okay, so that's married filing jointly and then falsified tax returns. And I've told you maybe unreported income, he did not report something. Now, unreported income is one thing. False expenses is another thing. So what are false expenses? Your spouse had a business, a sole proprietorship, a small business, and he claimed $10,000 in advertising costs that he did not truly pay, right? Those are false expenses. You have a home office, or he had a home office, or the other spouse had a home office, and she, for some reason, claimed security expenses of $5,000. Let's not go crazy here. $5,000. So she claimed $5,000 in expenses that were security expenses, but when they truly did the exam, they found out that these were grocery expenses. So that's falsifying, right? So falsified could be unreported income, or it could be false expenses, or you lied about earned income credit, you lied about something, so that you had a kid that you weren't supposed to claim, things like that. So that's condition one is married filing jointly. Condition two is you falsified your tax return, right? The spouse, your current spouse or former spouse. The third thing is at the time you were signing those dotted lines on the tax return, you didn't know that he falsified or she falsified something on the tax return. So that led to understatement of taxes due. So you didn't know at the time, or you had no knowledge of him falsifying it, or you couldn't possibly have had the educational background to be able to really say what's going on in the business, to be able to know that he falsified something, right? For example, your husband has a medical practice, or he's an attorney or something, and he files just like you do at the end of every year, and you were thinking that he had filed the tax returns, it was correct. You just signed the dotted lines. You trust your spouse, right? I know how that is. And you signed the dotted lines. You're not a doctor. You don't know what's going on in its practice. You did not have knowledge. At the time you were signing, you didn't have knowledge about what was going on in the business. You're not active in the business on a daily basis. So I've talked about three things: married filing jointly, fraudulent tax returns. Third thing is you didn't have knowledge of him falsifying when this happened, right? And I'm not seeing any comments. I think probably I'm live, but I'm probably not sharing to public right now. But anyways, I'll fix that when we're done. Okay, so the fourth thing would be that right now you're separated or you're divorced from the spouse. So you really don't know exactly. It's not fair for the IRS to hold you liable for something that you're not married to the person anymore. The person deserted you, or you're divorced, or you're separated. It's not fair. It's not fair for them to hold you liable. So we have to look at these four things. If we look at these four things, that's married filing jointly again, false tax return that, they found out with an audit or an exam, You didn't know when you were signing the tax return that this was false. And the fourth thing is you're now divorced. He's deserted you. You don't even know what's going on. Those are four things we need to consider. If you qualify for these four things that I've discussed today, you do qualify for something called innocent spouse relief with the IRS. All that debt that you both incurred when you were married, either currently or formerly, your former spouse, you still qualify to get a relief. It's called innocent spouse. So if you have any questions about this relief, please give me a call. I'll be happy to a call or a DM or private message me, and I'll be happy to help you with it. I know it could be frustrating when you feel like you're supposed to trust your spouse and you find out that he or she, they've been doing so many things that you were not aware of. Gambling winnings. You didn't know he was going to the casino. If he did go to the casino, you didn't know he was winning anything. So it is possible for you to be married and not know what's going on. But thankfully, and the IRS realizes that there's that innocent spouse relief. So I hope you found this useful. I'm sorry again, this was late in the day. I hope you all have a great weekend. I will see you again next week. Okay? Take care. Bye.